One of the most important functions to bookkeeping in the accounting department is recording business expenses. It is extremely important that your business not overlook any expenses that you could potentially write off. Realize that the most common type of tax that every business is going to be paying is income tax. And income tax revolves around the difference of the sales minus expenses equals the income. Income equals profit, and the amount of profit that a business has will really dictate how much taxes they have to pay. You want to reduce your tax liability as much as possible by making sure you write off every business expense. Realize that business expenses must be related to the business actually making a sale or the day-to-day operations. You cannot be writing off expenses that are not related to the business and are more for individual or personal benefit. If you do this, the IRS is going to get very upset with you and they're going to hit you with a large fine. The last thing they want to see is you not pay the right amount of taxes and really just be getting away with murder by not recording what you actually owe. Now, when it comes to business expenses, it can range widely. It could be the raw materials that you have to actually make a physical product. It could be the employees that you have in the office. It could be just the overhead cost of your actual facility. You're gonna have a lot of expenses and it's easy to overlook some of them. Some of them are often easier to write off than others. Depreciation is one that is actually a lot more difficult and is when you're gonna be writing off a portion of an asset. Typically some type of piece of equipment or maybe even the actual structure that your business is housed in if you own it. And essentially your accountant will determine, hey, this piece of equipment, for example, has 10 years of life and it costs $10,000. So we're gonna say each year we're gonna write off $1,000 instead of just writing all $10,000 off that first year. It just doesn't make sense. So you wanna properly depreciate any valuable assets. And again, your accountant's gonna be able to do that for you very easily. When you're starting a new business, you have all types of startup expenses that really range pretty far, even into the legal and just counseling itself. So again, anything related to the business when you're getting it off the ground, and it could be even a meal in which you're meeting with a potential client, and you can actually write off that meal. Now you can't write off alcohol, among other things, but you can write off a lot of expenses that you might think that aren't actually capable of being written off. It's a good idea to record them and then meet with your accountant at the end of the year and go over the expenses to make sure that everything is okay. When you have employees, you're gonna have all types of expenses, and even the taxes that you're paying them are even considered an actual expense. So, if you have any questions related to business expenses, please don't hesitate contacting us, as it can get very overwhelming and not doing it properly can get you in a lot of trouble. Thank you.